Welcome back to my final daily report market analysis video with me, Richard Perry, market analyst at Hantec, on Monday, 19th of August. Looking at gold, which has started to drop low. We discussed towards the back end of last week that maybe the market was starting to form into a bit of a consolidation pattern. Maybe the profit taking could start to come through, and it seems as though that has started to develop. Friday we saw a drop, or certainly a negative candle, and that negative candle has continued lower again today, around about 1% lower now today. Now, I've drawn in this little dotted green line here, which I see as a bit of a pivot around 1510. Now, you can see that better on the hourly chart, where 1510 had previously been a basis of resistance, broken through that, became supportive, and then since then it's sort of been playing around with that line, and now trading underneath it, that becomes a basis of resistance again. So that's your first line of resistance to look out for. Market is trading. Well, it's actually dipped below 1,500 bucks today, which is psychological level. I think if it closes under that, that's not especially great, because that would be back at the lowest close since, well, the 9th of August, potentially. But then front of last week, we saw 1481, this spiking day of where the market first of all was higher, then lower, then closed on a rebound up from 1481, which is the low. Now that clearly is a level of support that we need to look out for, because if you see a closing level below that, completes a little top pattern. Again, you can see that better on the hourly chart. This would form into a top pattern, and you'd project that downwards, actually around about 50 bucks of negative projection there from 1481. So prospect of this continued correction could come through. However, my expectation is that this 21-day moving average, which has been the basis of support pretty much since May, starts to come back in as a feature. That's 1464. You've also got the breakout of 1452. Effectively, these momentum indicators are just unwinding, I think, within pretty strong configuration. That RSI dropping back to 60s. Also, the MACD line's just losing a little bit of an impetus, but the stochastics have not really dropped off, interestingly enough. So I think it's just an unwinding move. First of all, within a consolidation above 1481, and if that consolidation above 1481 does continue to hold, then I think that once more, which on the hourly chart still above 30 on the RSI, negative in the sort of configuration of the last couple of sessions, but it's not turning decisively negative. And I think that the 1481 to 1534 could start to turn into a bit of a consolidation area, much similar to what we saw late June into July, where the market just sort of started to drift sideways, consolidate, but using weakness as a chance to buy within that consolidation. And I think that could be what we see here. So 1481 is key to that. So with that in mind, I wish you good luck in your trading today. Click here to subscribe to our trading videos on YouTube, but also go to our website where you can sign up to our trading webinars. Thank you very much, and I'll speak to you soon.